In today's episode, I'm going to teach you how to trade the continuation setup. Continuation is part of a day trading strategy where we're looking to capitalize on multiple days of upward momentum. Typically, a continuation setup begins on day one with breaking news. News comes out and the stock squeezes up 30, 40, 50%, maybe 75, 100% or even higher. And then on day two and day three, the stock just keeps creeping a little higher, and a little higher. And this ends up culminating with a final short squeeze where early short sellers who shorted maybe on day one or day two get forced to cover as the price just keeps moving higher. This is sort of capitalizing on the stock being irrationally strong. It doesn't really make sense necessarily. And so people who have a strong short bias will analyze the fundamentals and will say the price is detached from the fundamental value. It doesn't make sense that it's this high. I'm going to short it for the move back down. But as we know, certainly with GameStop and many other stocks over the years, a stock can be very disconnected from the price and the actual true market, maybe valuation. And it's hard to even call it a true market valuation because if people are trading the stock at this price, that is in fact how the market values that company. So as an active trader, we love volatility. And our goal really is to capitalize on this volatility while at the same time managing our risk. Right now, today, I am up $10,695.44, and the bulk of this profit has come from trading stocks that were on continuation. It's the second day of continuation, or the third day, or in some cases, the fourth day of a stock pushing higher. One of the things I said at the beginning of this month was that each day I'm double my $5,000 daily goal or higher. I will teach a full-length class on the strategy or the setup that gave me the bulk of the profit on that particular day. Now, what's interesting about this day and trading continuation is that this is a bit of a departure from the strategies that have given me the bulk of my profit this month so far. Most of my big green days have been trading day one of breaking news, where the news comes out and instantly the stock goes up 50%, 75%, or even higher. And we've seen a couple of stocks this month that went up 500, 600, even 700% in one day on news. So with that level of volatility, I've done really well on day one of news. And I think, in fact, because we've had stocks that have made such a big move on day one, we haven't had as much continuation because they really got super extended right out of the gates, and then they kind of come back down to earth. But over the last couple of days, we've seen a couple of stocks that have really given this nice continuation setup where they just keep pushing higher and higher and higher. So we're going to go ahead and jump in. Those of you who are new, my name is Ross Cameron. I'm a full-time trader, and I want to be the first to remind you that, hey, my results are not typical. I've been doing this for a long time. If you ever want to check out my website, you can see at warriortrading.com. If you come over to our members dashboard, or if you're already a member, or if not, you can go to the About section, and you can check out my broker statements here, 2017, 18, 19, 20, 21, 22, 23, 24. Now, I've been trading for a lot longer than just 2017, but what I did in 2017 was I funded a small account with $583, and I did this because at the time in 2016, a lot of people were challenging me. They said, Ross, I don't think you'd be able to make this kind of money if you were trading in a small account. I don't even think your strategy would work in a small account. And eventually I'd heard enough of that, and I said, you know what? I'm going to put my money where my mouth is. I'm going to fund this small account, and I'm going to show you what you can do with it. So what I can do with it, at least. So I went ahead, funded this small account with $583. And this is the audit, the independent accountant's report of all of the broker statements from January 1st, 2017 through 2018, 19, 20, 21, 22, 23. At the end of each year, I now have these statements audited. So that right there verifies that I turned that $583 account into $10,719,000 and some change. Average monthly profit, $127,000. Average monthly return, 64%. And as I sit here right here for the month of August, and again, I say this not to brag, but just so you know beyond a shadow of a doubt that the person you're about to learn a strategy from is actually trading it with real money and actually knows what the heck they're talking about. So month to date here for August, let's see. I'm sitting at, we'll go to detailed, $136,000. That does not include my profits from today. So my profits from today will bring me up to about $146,000. So I'm a little bit over my monthly average, which has been $127,000. Okay, so Yes, it's true that my results are not typical, but I think if you're learning how to trade, it makes a heck of a lot of sense to learn from someone who is proven profitable and is actually showing you that the strategy that they're trading, that they're sharing with you, they're trading with real money every single day. This is sort of what separates people who trade theory of the market and maybe someone like a college professor who's teaching about general theory of economics or the stock market. That's all well and fine if you want to be an economist, but if you actually want to be in the market trading every single day, you got to learn from someone who's actually doing it. So, all right, let's go ahead and jump into this class on the continuation setup. We've got 4 topics that we're going to cover. I'm going to define continuation for you. We're going to talk about the risks associated with it, and there are a number of risks. I'm going to share the rewards because obviously there are rewards as well, and I'm going to share with you my continuation trading strategy. At the end of this class, I'm going to give you some recommended reading for those of you that want to keep learning more about trading in general, and I hope you, of course, find that helpful. So let's start with the definition of continuation. A continuation setup is when a stock that was strong in a previous trading session, or perhaps over several previous trading sessions, is showing continued strength. In other words, the stock has had an opportunity to die. It's popped up, gave us that initial, oh, I don't want to do this in red. I'll do it here in blue. So it initially popped up, it had a chance to pull back, and it's just not pulling back. It just keeps moving higher. Again, it has another chance to pull back, but those dips keep getting bought up and it keeps moving higher. And typically what ends up happening with these stocks is as they sort of hold up and they push higher, what ends up happening is the volume gets higher and higher and higher as traders to the long side are buying into these moves to capitalize on the profit, and short sellers who shorted on these early spikes are getting forced to buy back the shares they sold short and cover. So that creates an imbalance to the buy side. Ultimately, we're always talking about an imbalance between supply and demand. So we've got demand and then we've got supply over here. And when you've got a stock that has a very limited level of supply, and then you have this huge surge of buying, that's when next thing you know, you're seeing a stock that's going parabolic and is squeezing up. So continuation, it's a setup that I've traded for a long time. However, to be frank, it's not one of my favorite setups because of some of the inherent risks. So let's talk about those risks. Number one, when you're trading a continuation setup, you don't have a fresh catalyst. You don't have fresh news. You have news that began, a couple days ago, and it's kind of continuing to push the stock higher. Now that's in most cases. There will be some instances where you're trading a continuation setup that had news, let's say on Monday, and then all of a sudden here on Wednesday or Thursday or whatever the case is, boom, they put out a second news headline. Now, when a company does that, I feel like they're fanning the flames. They're trying to ignite that momentum. And I think it's sometimes very strategic as part of their kind of PR strategy to create awareness about the company's stock. They want people to buy into the stock. Every company wants their stock to go higher in price. And of course, there's things they can do that are ethical. There's things they can do that are unethical. There's things they can do that are legal, and there's things they can do that are illegal. And in the markets, we see a blur of all of these different things, especially with some of the small cap stocks that we're going to look at. One of them today was especially interesting. It was very, very choppy. But nonetheless, the lack of a fresh catalyst on the typical continuation setup can be a problem. Second, you can risk declining volume. Usually the highest volume in most cases is going to be day one. So day one, the stock comes out, boom, squeezes up on this big green candle, right? And you've got breaking news, you've got high volume. And then what happens in a really hot market is ultimately you get a 700% move on day one, and on day two, the stock pulls back, but on very light volume. And then maybe it pulls back another little bit for day three on light volume. And then day four, boom, all of a sudden you're getting this daily continuation. It's daily bull flag, and the volume is coming right back up. But if that breakout is on lighter volume like this, that becomes difficult to trade, because what ends up happening is as the price is moving higher, you're having decreasing volume, and we would call that a divergence. A divergence like that can be a possible early indicator of a trend that will not sustain. So what we would always prefer to see is that the volume is actually increasing as the price is moving higher. Certainly that's what we saw with GameStop, But, there'll be other stocks that just don't have that degree of strength. And usually what creates this degree of strength will either be that the company has put out additional headlines on these days, so it's helped create awareness, or that the stock really seemed like 100% it was a short and it was going to go down, and a lot of early short sellers got trapped. So if you don't have either of those two things, you have a higher risk of declining total volume. But you also almost always have declining relative volume. Remember that relative volume, it's a term that we use a lot as active traders. Relative volume is the measurement of the average volume of the stock, average volume, and the calculations can be different. Sometimes it'll be the average volume over 50 days, which is the case with my metrics. It compares the average volume today versus the 50-day average volume for the stock. Other traders will use average volume over 20 days, and some might even use 14 days. And ultimately, my biggest winners, regardless of how you calculate it, will always be when the stock has 5 times higher volume than even its 14-day average. But it's still true if you do 20-day or 50-day. So 5 times or higher is where I do the best. So if this is a stock that was trading on light volume and then all of a sudden, boom, has news, you easily have 5 times relative volume. But typically, down here on day 2, day 3, day 4, day 5, your relative volume is now decreasing because your 50-day average is factoring in the high volume that occurred on that day. So now all of a sudden the average has come up. And these days, if they're trading on lower volume than this day, it's going to throw off your relative volume calculation. And the reason that that's important, you might think, well, that's just a ratio. What does that really matter? The reason it's important is because high relative volume typically corresponds to float rotation. What is float rotation? So float rotation is when you have the float of a stock, and let's just say the company has a float of 2 million shares, and the stock trades 20 million shares today. You have 10 times float rotation. And if this is a stock that's been trading on an average volume of, let's just say 1 million shares, it also has 20 times relative volume. So 20 times relative volume with 10x float rotation creates the potential for a parabolic move. The reason is, if you have a stock that's up, let's just say this is up 200%. If a stock is up 200% and there are 2 million shares in the float, you would figure there's going to be a lot of people who want to take profit, right? They're up 200% today. So there's 2 million shares of people of 2 million shares worth of holding that were up overnight 200%. They're going to want to take some money off the table. So when you've got 20 million shares of volume, there's enough volume to absorb all of those people taking profit. And that's important because let's sort of flip this a different way. Let's imagine that the float is 200 million shares. If the stock was up 200% with a 200 million share float, you now have 200 million shares that are probably going to want to take profit. Maybe not all of them, but a lot of them. And if you only have 20 million shares of volume, only 10% of those people would be able to sell at the current price, which means if they decide to start selling, and they probably will because the stock is up this much, the price is going to be declining over the next few days. So, and of course, you wouldn't have a float rotation on this because it's only traded 20 million of the 200. It's only a tenth of float rotation, tenth of one rotation. So lower float and higher relative volume and higher total volume create float rotation. And that's where we often see some of the biggest moves. So a continuation setup with lower relative volume and declining total volume, it's just not usually where I see the big exciting moves in most cases. And so as a result of these risk factors, we basically end up with a stock that we would say is choppier. It's just not as clean. It's not as easy to trade. They pop up, they drop down, they pop up, they drop down. You get stopped out, you get frustrated. They're just not as clean. And also, they're not as obvious. Why aren't they obvious? A continuation setup might only be up 2% today, or maybe even it's down 2%. And as you know, all the commission-free brokers, they want you to trade. In fact, every broker out there wants you to trade. The business model of the broker is they get clients, those clients trade, the broker makes money on their trading activity through payment for order flow in the case of commission-free brokers, through actual commissions in the case of brokers that charge commissions, plus platform fees, plus of course having that customer's money, custodianed with the bank where they can earn interest and lend it out and everything else. So they want to encourage you to stay a client and to trade actively. All of that means they're going to be actively sending emails and posting in very obvious places the top gainers today. They want to get you focused on these top gainers. Now, regulators don't always like this because they think that maybe these brokers are making trading too much like a casino and, hey, big gainer, big gainer, big gainer, because they want you to trade. That's how they make the money. Just, I suppose, like a casino. They want you there. Nonetheless, the result is that the stocks that are high percentage gainers, they're up 150, 175, 200%, those are the stocks that typically have the greatest imbalance between supply and demand. They have the most eyes on them. They have the highest volume, the highest relative volume, the highest float rotation. And that's usually where I get my biggest profits. It's day one of momentum. And a continuation setup, if there's another stock out there that is on day one of news is almost always going to be cleaner than continuation. But today was a day where the day one news setups weren't that strong. Now, it's a Friday in August, and it's not uncommon that companies will put out good headlines early in the week in hopes that traders will see the stock and will invest in the stock and will bring the prices higher, and that they'll put out either bad news at the end of the week or they won't put out any news at all because they don't want the news to get forgotten over the weekend. So Thursdays and Fridays are not the best days of the week to get breaking news, especially during the summer. Now, it doesn't mean that we won't have news at times on a Friday, but it's not uncommon that we won't, and we didn't today. We had a couple headlines, but we didn't have anything that was really obvious. So because our sort of top tier setups weren't present today, I think traders were more inclined to gravitate towards these continuation setups that were just kind of continuing to grind higher. Now, another challenge with a lot of these continuation setups is that they likely have what's called ascending resistance. So if I pull up an example here from today, we'll pull up GDC. This is a Chinese stock, these ones can always be really challenging. But what you'll notice is that if we back up this chart here, the last couple of days, I drew this trend line connecting the highs here, about here and here. And that brought me into this trend line right here around 11. And so I said, up here, I'm a little worried that we're coming into resistance. I don't know if it's going to hold that level. And then there was also a level I drew from here through here pre-market that I was worried about a little resistance right there. So you're not going to have ascending resistance typically on day one of fresh news. Day one of fresh news, you just don't have it yet. But after you've had a stock that's put in these highs, has pulled back, comes up again, is pulled back, you can get this type of resistance level, and traders will notice that it's a technical level, and that can be a problem. So, all right, we've clearly talked about the fact that there are some very noteworthy risks with trading continuation. So you could argue, why even trade it at all, given all of these risks? I'm definitely not selling it. Well, there are some rewards to continuation, but you always have to think about trading as risk versus reward. And can you manage the downside risk? And is the upside reward worth it? In the case of a continuation setup, it's often short covering that creates that upward momentum. So on day one, the stock makes this big move, and a lot of traders short it thinking this is going to be one of those big moves in one day, but it's going to come back down. This news isn't even really that good. This stock is not going to hold up. Next thing you know, they're in the green maybe for a little while, and then after hours or maybe pre-market the next day, whoosh, all of a sudden the stock is back at a new high. And they have to make a decision, do I cover or do I add to my position to increase my cost basis? And hopefully then I'll be right later today. So day two, maybe they're adding to the position. They're still accumulating. They only had a starter, they're adding, and then it keeps going higher, keeps going higher. And next thing you know, a surge of buying and the stock gets halted up, and they're getting forced to really make a difficult decision of, do I just cover this thing into this squeeze? Because look, it's up 100% today, it was up 100% yesterday. Now it's just moving higher and higher, and I'm in the red, and these can get dangerous. The most you can make when you short a stock is if it goes to zero. But if you short a stock at $3 and next thing you know it's at $6, $9, or $12, you can lose significantly more than you could have ever stood to make. So ultimately you have to bail out. That's probably the right decision. So that short covering creates that upward momentum, and that can create irrationally strong stocks, which is sort of like a surprise move. It doesn't really make sense, but it keeps going higher. And so as a trader, a big challenge is, are you going to trade the technicals or are you going to trade the fundamentals? It's really hard to do both, and trying to trade the fundamentals as a day trader, in my opinion, is nearly impossible. While the fundamentals matter in the grand scheme of things, in the short term, and the short term can be days, but it can also be weeks, months, or even years, a stock can be very disconnected from what someone might say is its book value. For instance, the value of just the balance sheet of all the assets and then taking away the liabilities. So, if you have a company like a GameStop or something like that, you're like, what are the real just assets on this company, on their balance sheet, that if you bought the whole company, you could sell off the assets for a profit? And are those worth more than what it's currently trading for? In which case, this is a stock you could feel very comfortable buying. But with small cap stocks and even large cap stocks, the market will sometimes value them at a multiple that is substantially higher than their book value, certainly, or what perhaps security analysts would view as their real true valuation, doing different valuation methodologies. So with the case of Tesla or even Amazon over the years, some of these have traded with outrageous PE ratios because market participants believed in their future earning potential. And so, of course, the price keeps going higher, and people who are shorting them early in the move get forced to cover. So you can trade continuation as a short-term swing trading strategy on mid caps or large caps like Nvidia or Tesla. In fact, through much of the pandemic, Tesla was a great continuation stock. This year, Nvidia has been a great continuation stock where the dips have gotten bought up and it keeps moving higher. Short covering creates that upward momentum, and there's just this strong sentiment around the stock. So now I'll show you a couple examples of continuation. This is APDN from today, where we had this initial move earlier in the week where it goes from 40 cents to 80 cents. And then it goes from 80 cents up to 240. And then it goes from, there up to 260. And then it kind of pulls back over these like this one day. And then it surges back from 120 to 240 and then pulls back. And then today from 180 all the way up to $3. And it's like this stock is just not giving up. It just continues to make new highs. And anyone who's shorting it is getting forced to cover. And you see, look at the volume today. Really high volume today, certainly compared to yesterday and even compared to the day before. And it's compelling compared to the day one. Day one had higher total, but this is not insignificant. So that's APDN, a very low float stock. It's a biotech stock. And this is one that actually, interestingly, put out a news headline at the beginning of the week. And I'll pull this up for you just so you can see it. So APDN put out news. This was on Monday. Applied DNA to submit application to New York State Health to expand intended use of this drug, etc. So that was on Monday. And then all of a sudden here on Friday, headline, submits validation package to New York. It's the same headline, except it says validation package instead of application. And I thought that was kind of interesting that they put out more or less what appeared to be the same headline. But even in spite of that, the stock ended up going all the way up to a high of $3.54. And so when we look at this on a daily chart, so when you look at my platform here, you'll see that I'm using a 10-second, a 1 minute, a 5 minute, and then the daily. So if we look at the daily chart on this, here we go. Look at the total volume, the pattern. Increasing, peak, and way down. But now it's coming back up. But this is a divergence. It's moving higher on lighter volume. So is it going to hold these levels? I don't know. But it's up 68% today. And I suppose it doesn't really matter whether or not it does hold these levels, because if you found opportunity to capitalize on the volatility today, then that's enough, for you to feel like you've done a good job as a trader. When I analyze the daily chart, I do think it has some room. 200 moving average is up at 750, but I would be surprised if it gets all the way there. I'd be very surprised if it gets all the way there today, especially with that type of catalyst. But you just never know, because there could be a short that took a big position and got buried. This is another one, CING from last week. So pushed up on day one, day two, it just keeps going higher, right? So it's not giving up, and then it just surges higher. So this literally goes from $2 a share to $26. So day two, this is all continuation. This is day two continuation from a fresh move that began on day one. So day one and day two. And day three, it pushed higher, but then it kind of came back down. Now, this also, and actually, I don't think, did I mention, I didn't mention the risk of offering. I wrote it here, but I forgot to mention it. So CING, this one I stated on this day here that I was concerned about the risk of an offering. And so a secondary offering is very common in the market with small cap stocks. And it essentially gives the company the ability to sell shares on the open market to raise more money. So when I looked at their quarterly filings, we had this news headline, which started the move. I look at the filings and I see, all right, they've got 950,000 share float. So that's the level of supply. It's very limited. And then I'm looking down here at their balance sheet, their assets, and I'm like, wait a second, their cash is $380,000. I've got more money than that right now in my day trading account. So for what it's worth, my day trading account right now has only a little bit more than that. But let's see. So someone asked me the other day what my, so I've got $398,000 in my account right now. I reset my account to $90,000 in July. And then in July, I made over 200 grand. And in August here, I'm up 130,000. So the account has gone basically from 80,000 to up around whatever, 400 grand. And, it's up like 200 plus almost 300% just in 8 weeks. But today you might argue, well, gosh, you're up 10,000. That's only 3% on a $400,000 account. It's 2%. It's a very small percentage gain. And while you're right on that, the total biggest position I would have taken today probably was $100,000. So that would have been the most buying power I used, and that would have been on FFIE, which was a little higher priced at the time. So biggest position today was probably $100,000. So anyways, $10,000 off of that is not bad. And also, just to clarify, when you take a $100,000 position, you're not risking $100,000, because if it goes down, you stop out for a loss. And if you lose 2,000 or 3,000, that's your loss. You're not risking going to zero. Okay, so anyways, I saw the stock had $380,000 in cash. And then I scroll down to see what their operating expenses look, and they're doing an operating loss in this last 3-month period of $3.2 million. So I said, guys, I'm worried that this is a company that's going to need to raise money. So I go back into their filings and I check and I see that they have a prospectus here to sell, what was it? This was from January. Was it this one? This is the one. So they did end up doing an offering, but now I can't remember where. Well, maybe. Oh no, that was that one. So it was this one here, 6.6 million shares. So I was worried about this offering risk. And then what ended up happening was the company did a secondary offering. So they raised money on the market and the price ends up dropping, and now it's come all the way back down to 10. So that's another risk with continuation setups. And so you get forced to do a little bit more fundamental analysis. All right, so that was CING. FFIE, this was the one from today, continued over the course of 3 days, just pushing higher. That one gave me my biggest winner today. And I'll talk about that one in more detail in a second. And then GDC, I showed you this one already, pushing higher, pushing higher, pushing higher. And then today going from 7 all the way up to 12 before dropping back down. So a little risky there. So now I'm going to share with you my day trading strategy specifically for the continuation setup. And I'm trying to simplify this really into just 3 steps. I can expand upon it. And of course, members, Warrior Pro members at Warrior Trading would be able to see how I do expand upon it in our classes. But just for the sake of, I think, this class here on YouTube, this free class, I want to keep it relatively concise. So I'm going to simplify my strategy into 3 steps. Step 1 is finding the stock to trade in the first place. So step 1 for me is to use my scanners, which are part of this day trade dashboard right here. This is the software that I've been developing since 2017. It has scanners, it has charts, it has a news feed. It also has the chat rooms and my broadcasts and everything else. So the scans that I was using to find these stocks were 2. The running up scanner right here, which shows me a stock that's squeezing up. And then I also have a continuation scanner, which has APDN, VRAX, GDC, GovX, NCNA, FFIE, and there's a couple others here. So they're not all necessarily stocks I'm going to trade today, but they're stocks that I'm going to watch and keep an eye on in case they give me a good opportunity. But FFIE ended up popping up pretty early. So when FFIE pops up, what do I do next? Step 1, okay, now I found a stock that's interesting. It's hitting my scanners. It's up 30%. Relative volume is 47. You know, it's clearly moving. So step 2 is I begin my analysis, which you could also say is my due diligence. So my analysis begins with the fundamental. I'm just checking and asking myself, is there a news catalyst on this? Is there fresh news? And I see that there's not fresh news. So I'm like, all right, not fresh news. Okay. Next is technical analysis, right? So I've done my fundamental analysis. There was basically none to do, at least initially. Now I'm doing the technical analysis. Now the next, I will say that this is the order that I do it in. First, I check to see if there's news. Then I check to see what the chart looks like. Then I'll go in and look at the filings to decide whether or not I think this has risk of an offering based on its balance sheet, its earnings, its profit loss statement, and if they have a shelf registration already filed. So, but the next sort of step here is to check the technicals, because if the technicals don't look good, then I don't need to waste my time going into the filing. So I pull up the chart, and what I noticed on this one was, you know, we really did make a really strong move yesterday. We came up, we pulled back, we came back up, we pulled back. And I just could visually see there's resistance right here. So I'm going to draw a line. It's at 894. All right. So that line right there, 889 actually, that was the first level I was kind of looking at. I was like, this is resistance. And so in the case of FFIE, I'll pull this one up here and I'll actually show you my first trade on it. So on FFIE, I take my first trade on this as it breaks over $9. So pre-market, we squeeze up right here. We break through this daily level, which was 889. We hit 9, we pull back, and right here, I took my starter, which was a little aggressive, but I took a starter at 919 with a stop actually at 9. So we broke over 9. I said, I'm going to get in here, and we got a pop up to 940, a little micro pullback, and then we got this pop right here. Now, the timestamp of my trade actually is, let's see, 2440. So yeah, so I had my first entry right here at this beginning, and then I took my second trade actually right in here. So I got in, I got out, it then dips down, I got back in on the dip, I get back out on that pop. So then we go sideways here, we come back down to 9, and we hold this previous level. When we hold the previous resistance level and it shows a support, I can now use that as my stop for the next trade right here for the move higher. And we end up getting a nice squeeze here up to 970 and up to 10. We pull back right here, and then watch this. We dip down, and then we break 1020, and we rip up to 1080. Now, on this stock today, through this move right here, I made $1,800. And then, you want to know what I did? I bought right here and got stopped out right here. I had my stop at 10, and I get in on that little micro pullback for the move higher, and it dips down here, and I went back to break even. So I went up $1,800, and I went back to break even on this stock. And, you know, I was thinking it's Friday. This is discouraging. You know, I'm trying to build my cushion each day, and I really don't like it when I'm trying to build my cushion, and then suddenly I give back all of the progress I've been making and, you know, take a good size loss. Not that $1,800 is a huge loss, but it's obviously, you know, it's a bit of a loss. So with that, I was kind of a little bit bummed out. And it comes back up again, and then it pulls back. And at this point, we double bottomed right here. And I said, you know what? We just double bottomed there. This thing is holding up. I'm going to take another stab. And I got back in right here, and I couldn't believe it. All of a sudden, it goes straight to 1040 and right up to 1080. Right here was the high. And just like that, boom, I can't remember what it was. It was a good profit. It was a good profit on that trade. I'm up right now 4,400. So then it pulls back right here, and I bought this pullback here. We got to squeeze up to 11. We dip down, and then right here, it was choppy. And I actually gave back about $1,000 on that trade right there. I got in for the breakthrough 11, and it stopped me out. It rejected. It pulls back, and then a little bit later, it comes back up again right here, and I got back in for the break of 11, but it goes only to 1120 and then comes back down. And so that one I lost on as well. It just didn't give me what I was looking for. And it tried again during regular trading hours, and it dropped again. And so at that point, I was like, all right, this one is just too choppy. So I peaked at about, I want to say $6,000 on FFIE, and I'm at 4,400 right now. It's give or take. So not bad, but it started to get a little choppy. The float on FFIE is 9.8 million shares. It's fine in those regards. It's not, it's a low float stock, but it's a little more thickly traded. It had, I think, when was the reverse split on this? It was back here in August. So, on this one, but we again have this kind of risk of offering. So this is cash in thousands. They don't have $793. They have 793,000. Okay, so thank goodness. At least there's that. So not that that's a lot of money though. Still, it's not a ton of money. And then you look at their operating expenses, and it's kind of alarming, right? This is not a insignificant amount of money. So it's in thousands again, which makes the numbers maybe not seem as big, but they're pretty big. So I'm a little worried about this one, and I don't want to get caught holding the bag. So I decided I wasn't going to overstay my welcome on FFIE. Okay, so that was FFIE. Then, and now after step 2 of my technical analysis is step 3, where I'm actually executing my trades. And I'm doing that in my trading software where I'm pressing the buy button, pressing the sell button. The software that you guys see that I'm using, let's see. Oh, we got to back it up here. This software right here, Day Trade Dash, this is for charting, scanning, news, chat, and broadcast, and my stream. And then for actual order execution, I use Lightspeed as my broker. But you could just as easily use, Thinkorswim or Webull or whatever the case is. Okay, so anyway, so execute the trades, lock up that profit, and then switch gears to GDC. Now, GDC, I really it's been moving these last couple days, but from the beginning, I was like, this is a Chinese stock, and we know that these Chinese stocks are really not trustworthy. They continually pop up, they drop down, they pop up, they drop down. And a lot of times what ends up happening is eventually they have these liquidation events where in one day, the stock will drop 80%. Nonetheless, GDC is pushed higher. It pushed higher yesterday, and then it pushed higher again this morning. So when it first hit my scanner, the scanner that it hit was my running up scanner. So it hits my running up scan, which tells me the stock is squeezing up right now in real time. I see it squeezing up, and I'm like, okay, well, let's look at the daily. Well, fundamental analysis, there's no news yet. We did have that news posted, but that news had not come out when this first started squeezing, which is also a little interesting. So I checked the daily chart, and I'm like, well, yesterday's high was 8. So it looks like we're going to break yesterday's high, right? So it comes up right here, and it squeezes up to 850. It then pulls back, and it pushes through 850. It goes up to 9, to 950, to 10. It pulls back, goes up to 12. Unbelievable. What a huge move. It didn't make sense. And you know what was really interesting about this was that we had these huge buyers on the bid. So we had initially, when I took my first trade on it, there was a buyer at 750 for 20,000 shares on the bid. And at the time, the stock had almost no volume. So I was like, this is a bizarre, it's a big order. Now this is going to show us that order. let's see. Oh, I've got to roll back a little bit further. So that order initially was right down here. You see that big orange block? That's the heat map showing you where there was a big order. So there's a big order right there. It ended up being like 40,000 shares. It got bigger. So I was like, clearly, I don't know, there's a big order there. So I got in with a stop basically at that order. It then pushes higher. It pulls back. It pushes higher. It pulls back. And then all of a sudden, 9:30 at the open, we're seeing 120,000 share orders on the bid. These massive buy orders. And so, I looked at that and I just thought, and right now you see some sell orders on it, but I just looked at that and I was like, someone is bidding this up. And I thought this might force shorts to cover. And so what ended up happening was that big buyer kept just propping the stock up. They were sitting there at 750, then they moved their order up to like whatever, it was 8 and then 9, and they just kept moving that order higher and higher. So I basically traded with that order as a backstop. And then once that order disappeared, I was like, I'm done. And I don't know if that was, I don't really know what the story was. Because then what was weird was the stock actually did have news that came out at 850. But it wasn't really, it was news. It was a fresh headline. Not sure how significant it was, but the price moved higher, but it seemed kind of like a fluffy, just little headline. Just, I don't know. It didn't seem super significant, but nonetheless, the price moves higher. So I did the best I could on GDC. I also gave back a little bit off the top though. I hit a high of almost 5,000. And then I gave back a little bit off the top, just on dip trades. And it was just, we were continuing higher right here. We still had those big bids, but it just started getting, the spreads were a little too big. So I just didn't trade it super well. Anyways, so that was GDC. It ended up coming back down, back to 715. And now you're looking at a chart on the daily that's like, it's really doesn't look good. High volume, declining, and now it's a red volume candle with this big reversal. We would call this a shooting star, and shooting stars come back down to earth. So this one's coming back down. Now, the next one I traded was CRKN. CRKN is also a continuation setup from the move that began yesterday, and this one was trading in tandem with FFIE. So as FFIE went up yesterday, this one went up, then it pulled back. And then as FFIE started popping up today, this one followed. So I got a trade on this, but I jumped in at a little high, and I thought we were going to break, as we broke through this double top, that we were going to break 3, but it ended up stalling out. So my trades on that, I took a couple trades, and let me pull this up on the 10-second chart. I like the 10-second chart, especially as a teaching tool, because I can kind of show you in a more granular way what exactly happened. So CRKN, this one, let's see. I jumped in it kind of aggressively. At this point, I already had a cushion on the day. I was up like $5,000 or so. And it hits my scanner, and I took a starter of this at 274, and I added it 282, 290, and it comes up to 3, but it can't break 3, and I ended up selling at 299 and then 290. So I was able to make $1,200 on that, which was not too bad, from 74 initial entry, adding as it was going higher, and then taking that profit out pretty close to the top. It dipped down, and then it didn't rally back up, and at the same time, FFIE kind of stalled out and rolled over as well. So I was like, all right, so that's that. Then the last one I traded was PRTG. Now, PRTG is going back more to standard momentum trading. This one's up 144% right now. It's the leading gapper in the entire market. And this was the one that initially this morning when I first sat down, I was like, oh, bummer. This thing went from $3 up to $8 nearly at like 5:30 in the morning. Then it drops down all the way back here to 450. It double bottoms and then just rips back up. So as it squeezed back up, once it got back above volume weighted average price right there, at that time, I was like, all right, it's game time. I can trade this. Let's start to get focused. So we'll back this up here and I'll show you where I started trading it. So let's see. So first trade on it, it was PRTG. So the first trade I took on it, I bought at 572. And so that was at about, let's see, 942, right in here, 943. So I bought right in this area here. It pops up, it dips down, and I got in right there. So I'm long here. It ends up going up to 6, up to 610, and I get out. I take my profit. It then squeezes up here, and then it flushes down. And I was like, ooh, that was not great. But, you know, I'm green on it. How much was I green on it? Now I can't remember. I think I was green $700 on it. Something like that. Then it comes down, and as it rips back up, I got back in here at 620 because I was like, oh, we're reclaiming this level. And I'm like, here we go. We're in a good shape. We're looking for the break of 650, and then it dumps down to 580, and I'm red on it. Now I'm red $300 on it. So I was green, and then I gave back the profit I made. And then it comes back up again, and on this one, I added back up here, basically very similar setup as this one, but this ended up pulling away to 75 to 80 and then up to 720. And I was pretty quick to take my profit off the table into that move. And that put me up $1,500 on PRTG. So with that, I was like, all right, you know what? That's good enough. I don't want to overstay my welcome. Because what ended up happening today with my P&L was I started the day, let's see. So first trade of the day was on FFIE. And I started in the day green, but my first trade was a partial fill. So I was up like, whatever, it was like a couple $100. And then I got myself up 1,800. And then I came all the way back down basically to break even, right? And then I kind of worked my way back up pretty quickly to 4,500. And then I dipped myself down a little bit. And then I got myself up to 7,000. And then I dipped down again. And I got myself up to 10,000. And I dipped down to about 8,500. Approximately. And then I got myself back up to up 10. And this is where I say, you know what, let's just walk away here. Obviously, I already had this kind of close call. I've already had a couple close calls today, you know, if you look at my sort of P&L. So it's getting a little later in the morning, and I just don't want to overstay my welcome because now, you know, it's Friday, it's the end of the week, and I'd be running out of time to recoup my losses if I end up taking, you know, a big loss at this time. We're just getting to that point of the day where if I push it too hard, it's going to be a problem. So as I step back right now and I look at the scanners, our top gainers right now, we've got PRTG, which was not good early, but then, you know, rallied at the open, surprisingly. And then we had SQNS, which made a move early, but 34 million share float. I was like, I don't think so. But here's the thing I wanted to say. So this morning, when I first sat down, I didn't end up taking my first trade until 8:30, even though I sat down at 7. So I sat here for 90 minutes without taking any trades. That's discipline. SQNS, it didn't look good. So that one I said, nope, I'm not going to trade that. PRTG, that one didn't look good either. Now, MNTS, this one was on the scans, but I looked at that and I said, nope, pre-market, it made its move after hours, and now it's pulling back. It doesn't look good. And then we had JTAI. So JTAI hits the scans, and this one ends up going from 20 cents to 34 cents and all the way back down. It's now red on the day. So when I saw that, I was like, uh-oh, that was kind of like one of my first warning signs that we were going to maybe have an issue today. So that was on JTAI, and then we had, what was it? There was another one I'm trying to remember. That was a round trip. Oh, that's right. We had SYTA. SYTA, this one did a round trip as well. And this was at like 7 a.m., 7:30. So this one goes from 178 all the way up to 3 and then back to 178. So I was watching it. I was looking for a safe entry, but I didn't see a place where I could get comfortable taking big size. It's like it just popped up too quickly. And the next thing you know, we were seeing these big sellers, and it was like, you know, I can't get comfortable on it. So we had SYTA, we had JTAI, and then there was another one, another penny stock, but I can't remember it off the top of my head right now. Maybe if I scroll back here, I'll see it. But it basically early this morning, OKYO, that one popped up. I was like, nope, that's not clean. Look at that pop and rejection. SQNS, didn't like that. So it just felt today like, I don't know, like we just didn't have the degree of momentum that I was looking for. And so for that reason, I was being pretty cautious. Oh, AREB, this was another one. AREB, this pops up and look at that rejection. So after seeing like 3 or 4 of these pops and drops today, I was like, I don't know, guys. This might be a no trade day for me. But then I ended up making my way up to $10,000 thanks to trading continuation. And it really began with that first trade on FFIE and that really powerful squeeze from 889 up to 11. Then from there, it's GDC and CRKN, and then that final trade on PRTG. If we look at another scan here, we could check top change since the open. So this is going to show us our biggest percentage changes since the open, which is also kind of a helpful scan because some of these stocks are the top gainers since the previous close. In other words, they were really strong maybe after hours or pre-market, but today they're not strong. Whereas this is showing the change from the open. So APDN is actually leading our change from the open scan today with that really nice move. But I think it's worth noting that our biggest change from the open is only 47%. So in fact, today, the bigger percentage gains were pre-market, and of the stocks that were strong pre-market, a lot of them have pulled back with a couple of exceptions. APDN, PRTG, CISO, this was from yesterday. It's up 20%, but it's a really cheap stock, so it's just not super significant. So, as we come to the end of the week, and I pull up my metrics here, one thing that I've been really happy with for the month of August is look at this profit to loss ratio. Average winners, $550, average losers, $312. So I've got a nice profit loss ratio. Check out the accuracy, 69.4%. 4-minute long average hold time for winners, 5-minute for losers. Had a 15 consecutive winner streak, but also had 9 consecutive loser streak. And my average daily gain for the month is $8,544. That is a great type of average daily gain. I am really happy to see that. And sitting right now with 468 trades. Now, if we dial in a little bit more, we'll go to days and times. We noted, I think yesterday, that I've been doing really well on Mondays this month, which is kind of unusual, but that's just the case. But if we look at the time of day, you'll notice sort of an interesting pattern. I've been trading really well between like 6 a.m. and 10 a.m. and then nothing, and then trading really well from 2 p.m. to 4 p.m. Why? Because I've been teaching classes this month during this window. So when I teach classes, I'm not trading. So for all of our Warrior Pro members, and for even those of you guys doing a 2-week trial, you guys have been able to watch me while I've been teaching these classes. Over the past 2 weeks, I have retaught all of Day Trading the Basics. It is now a brand new 15-chapter course. Retaught all of the chapters, so refreshed, brand new. So those of you guys who maybe have gone through the classes in the past, you can always, renew your membership if you're not currently an active member, or try to log in and, email us if you have questions. But I encourage you to check out these new classes because they're really solid. Anyways, so then price and volume, you can see here mostly this month doing well in the under 20, not really getting a lot of trades on stocks over 20. So just focusing on these lower price stocks and branching in a little bit to even a few penny stocks here and there, which is not my typical go-to, but it works. Continuation setups have been not my bread and butter, but this is a good measurement of continuation because this shows performance by prior day relative volume. And so if the prior day relative volume, if we're trading 5 times higher than the prior day or any of these, this is fresh breaking news. And these ones actually are stocks where we're trading day 2 continuation. So actually, I didn't even realize the extent of how much I've made this month on continuation setups. More than I realized. In fact, quite a bit more than I realized. Now, the way we view this table is that this shows my performance by relative volume. So basically, all of my profit is on stocks that have 5 times higher volume than their 50-day average. But this is my performance based on the relative volume just compared to yesterday. So let me give you the example of how this works. So yesterday, let's say so here's a stock. The average over the last 50 days, 50 days, 50, whatever, 50 days is, let's just say 100,000 shares. Okay. And then this one trades 10 million shares in one day. So on this day right here, on day two, it's still 5 times higher than the 50-day average. Even if this average goes up a little bit because of the 10 million here, maybe it goes up to like 300,000 shares or something. But it's still a low average because it's 50 days. It's only one day that was high. So this day trades 5 million shares. It's still 5 times higher than the 50-day average. But if it trades only 5 million shares, it's actually only 50% relative volume versus the previous day. So all of these trades right here are actually showing you stocks where I was trading second day continuation. Now, I really am surprised about this, although perhaps one explanation is that we've had a number of stocks this month where the move started after hours. And so the relative volume began with the after hours session, but I didn't trade it after hours. I waited for that pre-market move. So then pre-market, that was where I was catching that the first leg up on the next day. So that could be part of it, but that is very interesting. So that, I didn't expect that. If we look at this, if we just look at this in total numbers, big picture, we look at total numbers, we go back to when I first started using the software, which was in 2016, we'll see here performance by relative volume, 50-day average. Yeah, boom, it's all there. But again, here, a lot of profit is in this area, but these are all continuation setups. And then these are the ones that are just sort of in between. So based on prior day, right? So generally it's got to be way high versus the 50-day average, but the prior day, these are all continuation setups. And when you think back, GameStop, that was a continuation setup. A lot of those meme stocks were continuation setups. They just kind of kept trending higher. So I think at the end of the day, when you step back, continuation is riskier for some obvious reasons. We've got, let's see, and we'll pull this back up. We've got the fact that with a continuation setup, we're dealing with offering risk. We're dealing with the fact that we have ascending resistance potentially. We're dealing with declining relative volume. They're not as obvious, but when they work, man, they can work really well. And we got a couple nice ones today. And I think that as an aspiring trader, as a beginner trader, it's good to be able to sort of understand this is a fresh breaking news setup and this is a continuation, and start tracking your trades based on the two. You'll probably find that fresh day one breaking news is going to be easier to trade. I usually find that myself, but if we have a continuation setup, maybe start testing the water with small size and see if you can start capitalizing on some of that volatility that comes from shorts getting forced to cover as the stock moves higher. And hey, if you want to check out a 2-week trial at Warrior Trading, I will put a link. It'll be pinned to the top of the comments. It'll be linked in the description, and you can join me right here. Let's see, I'm going to pull that down right there. 2-week trial, there's the link. So 2-week trial at Warrior Trading. You'll get access to chapters 1 through 6 of Day Trading the Basics, my brand new course that I just taught these last 2 weeks, retaught it. You'll get access to chapter 1 of Strategies and Scaling, access to 3 badge holder interviews, and you'll get access to some mentor recordings and some live trading archives. So come join us for a couple weeks, get a sense of what it's like to be part of the Warrior Pro community. And as always, I'll remind you that trading is risky. My results aren't typical. So manage your risk, take it slow, and don't try to blindly follow me or anyone else. With that, I hope you guys have a great rest of the weekend, and I'll see you back here first thing Monday morning. I'll be live streaming for Warrior Pro members.